this session is organized by IG, and we have invited Binni here to speak. So any of Binni's view that she shared today is actually not IG's view. Just take note that for today's session, right, it is just purely for education. So if she happens to provide any form of trade direction or trading calls, just take it as a learning lesson. It's not to entice you to enter trades or to buy certain tickers and things like that. Okay, so all in all, just take note that everything here today will primarily just be for educational purposes. Okay, with that, I will pass my time on to Binni right now. I'll just flash her slides. Okay, Binni, to you.
Yes. Hello to those in webinar and to those in seminar. Just want to know that for those in the seminar that you can, webinar, that you can hear me. If yes, just let me know. Okay. Okay, good. I can see you now. All right. Have you had your dinner yet? Yes, there's outside, there's food for those in webinar. You have to eat while listening to me because the session is until about 8:50, 8:55, I think so. Today will be a little bit of a hard topic. Hard topic means that we are dealing with psychology and we are dealing with automation. So with this, let's start off with disclaimer first. This disclaimer comes from IG, so do spend some time to read them, especially on the part where the session is for educational purposes and does not have any form of investment advice, because I'm not qualified. I can't give financial advice. Okay. And the next part, the next disclaimer comes from myself and my company. Same thing. It's no financial advice here. I'm not qualified, as well as this is educational. All right. Because today there's quite a lot of things to cover, so I will just go through my introduction quickly. Anybody reading the Chinese newspaper or the business section? Don't have. Now you don't read newspaper anymore. Sad thing, right? Because you would have heard me, seen me a lot in the Chinese newspaper. All right, sometimes in the television as well. But television is very difficult work, because we need to get a lot more things prepared. So usually when they ask me to go TV, I would just say I'm not free, because a lot of preparation work to be done. All right, so I'm in the newspaper quite a lot, but usually when they ask in the newspaper, they ask you to recap what happened and to provide a reason. Most of the time, we try to give logically sound reason. Okay, meaning that we try to recap to tell you what actually happened, to provide an explanation for certain things that happened. For example, why would STI move up recently? Okay, so that would be discussed tomorrow, because tomorrow I have the morning session book for the newspaper already and the evening session book already. That means that today they already booked my time to be interviewed tomorrow. Why do I want to talk about this? Is because you realize that whatever that you are going to read in a newspaper, right? It's not about trading, nothing about trading, because trading talks about our reaction at that point of time. That means that whatever that is being reported in the newspaper would have happened. Likewise, whatever that you're going to read in the books, whatever you're going to hear me had already happened, and that belongs to me. Okay, and this is going to make trading a lot more tougher. Why is that so? Because then when you are facing it yourself, you are dealing with it yourself. So how many of you actually, I mean, to be frank, right, gave up and then come back again, and then give up again, and then come back again and give up again? How many of you actually had this experience? Don't have? Yeah, okay. In Chinese, right, we say this 打不死的蟑螂，不是蟑螂是小强， just to make a bit of translation, right? You know, it's cockroach, you can't kill it, right? Okay, so this is me also, right? Meaning that I've started a long time ago, and this is me. Sometimes I feel very asking myself, why am I here doing these kind of things? All right, and then the next moment when things get going, get okay, I start again. And after that, when it doesn't get well, and I ask myself, why am I doing these kind of things? So in my earlier days, when I started training, then there are always a question, always one question in all the session. The question is, if you are so good, why are you training here? Do you have this question for all the speakers? Yes, right? If you are making so much money, right, why are you here? That's why at the age of 35, I tried to retire. That's why you see this remark here, I semi-retire at age 35 to find an answer. Because at that point of time, my trading was going very well. And that was when I designed the whole wash and rinse system and worked a lot to turn the manual trading, right, the trading into automation. So by then, I was able to retire without working actually. Now I actually don't need to work. I mean, I dare not say that I'm rich like those who drive what cars. I also don't know what kind of cars was. I don't like cars. Okay, but enough to not work anymore, right? But I still think that after the 3 years of experience, I think that there is a need to be active. Otherwise, it's not healthy. So if you ever have the question of why people like us come and train, because just now when ML came in, she said hi to me, I was so happy. Okay, so that is human. I think that that's the reason over the years that I've discovered. Okay, so today, what I like to share is I like to share with you the psychology. That means trader psychology, which is a bit of a hard topic. It is not about talking about methods, because when we talk about methods, right, it's easier. Methods say that, wow, this is a particular secret, and this secret, you open your eyes and you thought that you get this secret from myself or from any gurus out there, you'll be able to make money already. Today is on psychology and automations, which is, to me, the most important part. Because why? Share with you, I have students who have been with me for more than 10 years. I have new students also. I have students who wrote to me that they are highly successful. All right, one of them in Kuwait actually opened a fund himself, a trading fund. He is now the boss of his own fund. About 10 years ago or 12 years ago, he flew from Kuwait. Brothers came to learn from me. All right, especially to attend. At that time, I'm still running physical classes. Okay, but there are also people who are not successful. To be very frank. All right. So one is the differentiator here. Do you know that this student, before he became a fund manager, do you know what profession he works as? Make a guess. What kind of profession do you think he worked as before he converted to become a fund manager himself to open up his funds? Just random guess. Salesperson. Okay. Any more? Oil. Oh, okay. He's actually a doctor, both him and the brother. Okay. Now, why a doctor? Why is it a doctor? One thing that he has, all right, which I realize him as his brother, they are very precise. That means that precise, and they are very systematic and on the rules. This is this and that is that, and they want to be very precise. Okay. I am also this kind of person. Do you know that when I buy a TV, have you ever read that manual, how the instruction manual, how to operate the TV, what is it, etc.? You read that, right? Never. I read all the fine prints inside. That's me. Okay. So I think that there's a certain quality inside. All right. So I like to share with you all these things here to hopefully, perhaps that you take out one thing out from this session. All right. Okay, so I trade a lot of instruments. Just now, before you came in, right, you saw that I was sitting here with a mask on and then looking at my computer, right? Yeah, I was actually placing a trade into the matter. Yes, okay, because when I was here, there was a trade and I couldn't do it. I forgot to set it up. So I actually sat down here and then placed in the trade. Okay, so I trade a lot of instruments and mostly in a 4-hour, how to say, 4-hour time frame. What is the 4-hour time frame? And this is very important for this session as well. Okay, because if you are trading, you realize that trading, you want money, right? But money, you don't want it to be at the expense of something. What is the expense of something? There was a period of time when I started in the early days. It was at the expense of my health, meaning that I spent a lot of time staring at the screen, right, to the point that I suffered badly on my body. Okay. Now, I'm not sure whether any of you out there trading full-time, have you have any body aches and then here pain, that pain, and etc. Okay, so this is very bad because we have to sit down for a long period of time, you realize, and this is not healthy. That's why my trades happen every 4 hours, which means that the time critical to me would be at 1 p.m., all right, 5 p.m., 9 p.m., and 1 a.m. 1 a.m. I will already sleep already. Okay, so what's important to me will be 1 p.m., 5 p.m., and 9 p.m., which means that during the rest of the hours, right, I have a lot of free time. Okay, I share with you a diary of how the trades are being conducted. So this would address a little bit of that psychology and how you can automate your trade. All right. How many of you are already automating your trades here? And also those in the webinar who are automating your trades. Automating means that, yeah, ML, you automate from my mean. Yeah, she used my automation. That's why she raised her hand. How about the rest of you? No, you haven't explored automation before? That means automation means that the robot will automatically open the trade for you, manage the trade for you, etc. So that's called automations. So you can adopt for a full 100% full automations, or you can have a bit of a control, which is to have a maybe a half automations. Okay, so these are ways to do that. So I will just talk about that. All right, so what I like to do, the objective of today is I will go through a bit of a revision on what I've covered on wash and means, but more important to go through a little bit on your traders, your weaknesses, okay, and how you can use automations to overcome these weaknesses. All right. Okay, so let's go through what is wash and means. So this slide you are very familiar if you had attended the first and the second session. Wash and means that if you had a trade put in and you find that this trade didn't go well, for example, you bought something and instead of going up, it kept going down. And then after that, after it dropped, right, it stopped you out, means that you make a loss. And after you make a loss already, you will just move up like nothing happened and you say, ouch. Have you tried that before? Any of you? Yes or no? Nobody experienced this before. Raise your hand. Oh, all the time. Yes. Okay. That's not very good news to hear from. Okay. Now, all the time. So the question is that, is there a way for us to make something that happens all the time to our advantage? So this is what wash and mean is all about. Okay, now, if you see this chart, which is on Go, it's a perfect trending stocks. Perfect trending movement here. All right, then I mean, if you look into all the historical price movement, you will say, hey, look, isn't it perfect if I can have a sell here, a sell here, a sell here, and a sell here, for example, right? That's perfect, isn't it? Okay. Now, the key thing is that in the past 2 sessions, I've explored why you can sell here, why you can sell here, why you are able to sell here. So this is wash and means, and this was basically what I've covered. All right. Now, the most recent one that happened in Go, all right, during October, that's very, very recent, is again the same pattern that happened, which is what I call wash and means. Okay. Most important is that when you take a look at the chart, what you need to do is you need to be able to describe the trend. Okay. Now, to describe the trend, you can use things like your moving averages. That means in the IG platform, there are moving averages that you can put in. Like for example, these I have put in the standard moving averages, which is 20, 50, and I think 100 if I'm not wrong, or 200. I don't know what's the default setting, I forgot already. But anyway, you can just put it in. You're able to see that the moving averages are trending downwards. Or things like you can draw in a trend line. The one that's orange in color here is actually a trend line. So these are all the technical tools that you can use. And they are pretty generic, means that you are able to find them in the open platform, such as you Google or you go and watch any YouTube. You should be able to find any explanation on how to use them. But the key thing is that in trading, what we want to know is that whether at this point of time, look at the one that is orange in arrow, right? Whether it's being supported or being resisted. Now, if you can describe the trend as being a downtrend, you are able to find a resistance, for example, then you should be able to find a trigger to trigger in the trade. So these are, the general steps. First, identify the overall environment. All right, and then identify the location, whether it is at a resistance or being supported location, and then you pull the trigger. So this was basically what I've said in the past 2 sessions, and I've taught you how to use it by going through the concept of wash and rinse, right? So let me just revise a little bit. If you take a look into this particular highlighted box here, all right, so this is the highlighted box here. Okay, so revise with you and also guys in the webinar. All right, so let me just mark 1 versus 0. All right, are you able to draw a wash line? If yes, what color wash line? All right, I think that this question will be a little bit tough for people who haven't attended the 1 and 2. But for those who have attended, so what kind of wash lines are you able to draw? A green or magenta wash line? And are you thinking to go long or to go short? 1 and 0. Any thoughts here? Okay, if not, I have to arrow people already. And I asked ML, what color line to draw? Cannot be magenta. 1 and 0, green line. Okay, so I don't have the green color here. I will just draw it here. Okay, so this is called a wash line. All right, when we draw a wash line, what we wanted to know is that if price stays above it, then anything that's above the wash line, that will be equal to bullish. Anything that is below the wash line, that is bearish. All right, so when in the relationship of between 1 and 0, it means that 1 had moved higher than 0, the high of 0. So that is a bullish relationship. Okay, and we don't want this bullish relationship to turn sour. Okay, so between 2 and 1, all right, so are we able to draw a wash line? Yes or no? 2 and 1, yes, right? Okay, we are still able to draw in the green wash line. Okay, between 3 and 2 then, are we able to draw in any wash line? No, because 3 doesn't close higher than 2. Okay, we can only draw in the wash line when something close higher than something or something close lower than something. So that is the theory here. So the wash line, it's very simple to draw. Now, what we don't want to see is that when we have the wash line here, we don't want to see any of the bars closing below the wash line, because anything that's above the wash line is going to be bullish. All right, because price close higher. Okay, when price trade below or close below the wash line, it means that for people who bought here, basically who bought above that wash line, by the time they see these red color candle here, are they happy or sad? Sad, right? So they've been washed and rinsed here. Why? Because whatever they bought, by the time they see the red color candle, they would be at a loss. Okay, so therefore this red color candle here, right, becomes our trigger. Okay, so this concept is not tough, but what is the difference between a student who know this concept, who are able to, create a fund out of it, versus one who are not successful? So what is the key thing here when the concept, they are the same? So I like to always draw a parallel into trading versus being a doctor. So sometimes you read the same book doesn't mean that you are a good doctor. Okay, so there are different way of treating a patient. Doesn't mean that you have the same symptom, you'll be treated the same way. It really depends on the experiences of the doctors, etc. So this is, to me, the same thing, right, for trading. Okay, so what I have here is probably a lot more experience than what you have, because I probably traded this pattern for maybe thousands of times, but you might be, trading this for less than 10 times. Okay, now apart from this, right, one of the key things which makes a huge difference in terms of performance is really this word here. I think you are also very familiar with this one, right? First, fear of missing out. Okay, so that's a very, very, how to say, popular words. And I would really, really think a lot of problems come from this word called fear of missing out. Okay, if you say that fear of trading or greed, let's talk about greed then. Why are we greedy? I don't think that we are born greedy, but a lot of time it's because that we might have entered the trade a little bit later, to find that other people might have made like $1,000, but because you enter the trade late, right, you might make only like $100. So you say, okay, let me just hang on a little bit more, right, just to get another $150. And by doing so, your profit might turn into losses. Okay, or perhaps that you want to enter a trade and then you are just not around to look at the trade. And by the time you sit down and happen to see the trade, it has already moved. And you fear that if you don't put the trade in, you're going to miss it because this might be your one and only chance. And because of this, you put it in and bam, that's where you get punished. All right. So, I mean, I don't think that a lot of time it is a problem of ourselves. I think that it is also a problem that is being created by the environment you are at. Because personally, I had this problem. Because when my daughter was young, okay, baby, because she's allergic to soy milk. Because usually for baby, right, when they have stomach problem, the PD would prescribe you stop cow milk, you move to soy milk, right? But the fact that she's allergic to soy milk, just one pinch, right, will land her in hospital. The fact that she's allergic to soy milk means what? Means that she can't even drink cow milk. So I couldn't give her milk powder. And what kind of milk can she drink? Guess. Correct, breast milk. Okay, so me and her has to be together. There's no way that we can be apart. So when the trade was coming, wow, going to trade already, cannot, another one baby here, cannot be apart. Okay, of course there are people who say you pump up, etc. But I'm telling you the truth. Okay, so because by the time that I have attended to her and then I go and look at my trade, already move already, I say, oh, I don't have money for today because I missed out already. Not because I don't know what to trade, just because I'm not there to trade that. All right. So there can be a lot of weaknesses, such as people overtrade. When people overtrade, that is a weakness. But have you understand then why people overtraded? And that could be because that they don't have enough income for this particular session. That's why they keep on trading. Okay. Of course, there can be reasons such as I am having a very good luck right now and I want to continue to trade. So there can be many other reasons. But if you really look into the weaknesses part, which I've listed here, such as you hold on your losses for long. But then in the first place, why are you having the losses? It might be you had a bad entry. Therefore, you had no choice to have losses. And of course, it is our fault not to cut loss. All right. But in the first place, what resulted from their loss? Or for example, you didn't dare to cut your losses. That would be also a psychological issue. But you know, when you don't dare to cut your losses, could be also one reason. You fear that after you cut your losses, you might miss out on that actual good moves to come, right? So there are many things out there. And by the time, after knowing all these weaknesses in a trader psychology, I came out with one conclusion. A lot of psychology is a result of the fear of missing out. Okay, if you want to really pinpoint to key reason, things like you exit your winners too fast. You also fear that if you don't exit, then it's going to turn out to be no profit. Okay, for example, you know too much. Knowing too much is also not good. You have analysis paralysis, but you fear that if I don't know a lot of things, I might miss out being able to, you know, get that next winning trade. All right. Now I just want to talk about the last 2 points, knowing too much and knowing a little. So usually when a new trader first started, right, they would know a little. And you find that when you know a little, you usually have beginner's luck and you can make money. Do you agree with this statement? That means that when you first started, right, it's quite easy to make money. Have you experienced this before? Yes, huh? But how come the more that you move, you go, the more that you know, how come you keep losing? Ever wondered that before? Okay. All right. When I first started, I started at the stage where I have to draw the prices on a this kind of graph paper. Yeah, that was the stage that I first started. I mean, I don't think I looked that old, but when I first started, I started very young. So we still don't have a lot of technology which gives us charts. Of course, that point of time, that time was no handphone, no mobile phone. The mobile phone was the big water bottle, and we were using pager. All right, so that's the time. So I read a lot of books, and I realized that a lot of time the books that I read, right, it's very well documented in the books. And when I apply it, they usually don't work. Tried that before? Okay. So a lot of students came to me and they tried to learn a lot more things. That means that they tried to know this and that to the point they mix things together, and they probably know a lot more than myself. Okay, they mix things together and they get confused along the way. Okay, but they didn't understand what is the key reason there. Actually, the key reason can be just sum up with the few solutions that I've listed on my slides here. Okay, one, you have a trade plan. A lot of people think that the trade plan is to map out your entry and exit. The answer is no. This is not your trade plan. Okay, so I'll be covering what is a trade plan. The second thing, right? If you look into the doctor specialization, you realize that a lot of them start off general, but what happens subsequently? They will specialize. So when you have brain issue, you go to a neurologist, right? When you want to visit a GP, even the GP has to study family medicine. Okay, so each of them has specialization. So even the doctor start off as a generalist, they learn everything, and after that they specialize. So why are we learning everything? My question to you, even engineers, they specialize in terms of whether it's electrical, materials, chemical engineer. But we are learning everything. Okay, so we are trying to be jack of all trades, but then we are master to none. All right, of course, then it's easy for us to say that, hey, this particular method doesn't work. But why is it that every time when you see a preview, that guru over there tells you that I show you the statement, I'm making like $10,000, $20,000 a month, and you decided to follow the guru because the guru was making money. How come you do it, you can't make money? All right, there must be a lot of reasons behind here. I'm not saying that the method is good. I'm just saying that why is that so? Okay, and of course that there will be this risk and trade management I want to cover. Lastly, all right, there's the difference between understanding versus action. I understand I need to cut loss. So all of us understand you need to cut loss. But why is it that you are hanging on to your losses? How many of you hanging on to your stop losses and keep them in the fridge already? Yeah, okay. I don't consider myself one of them. All right, but I also keep some inside the fridge. Okay, not because I don't want to, I don't cut loss, I cut losses. All right, but I have, yesterday I was doing a seminar with my students. And one of the market that I was highly interested in was the Hong Kong market. All right, and I explained the reasons of why. And obviously the market isn't doing well, but no, we don't cut losses because we have a reason that, because the portfolio is mainly for dividend. So that's for dividend. Okay, so I think that there is a need to understand why you don't make certain action. And once you're convinced, you stick to it. But there is no excuses why we don't cut loss. Okay, I used to describe cutting loss as cutting away a part of the flesh. All right, but luckily I still have a lot of flesh to cut, so still can cut. Okay, all right. So with this, I come up with one suggestion to all of you. All right, is to outsource certain parts of our weaknesses to the automations. And this is actually a reality that's happening in our life. Example, how many of you cannot live without your handphone? Yes. And what have you outsourced to? I think I've outsourced to things like, for example, right, if I don't put things inside my calendar, I tell you, today, this moment you tell me, the next moment I will forget already. It's just magical. When you hit that 40 mark, right, this one go in, this one come out. Yeah, okay. All right. I used to be able to remember every of my students, what they wore when they come for session. Now I don't think I have that capability anymore. All right. So we outsource to automation is one of the suggestions. All right. So I'm just going to quickly go through a trading plan here. Okay. So for example, what is a trading plan? They are pre, they are during, they are after. First, I want to cover what is pre. Okay, very quickly. One is the pre-trading plan. All right. Pre-trading plan means that pre-trading. Okay. A lot of people don't focus on this one. And one of my pre-trading plan before I trade is that there is a need for me to exercise. This is compulsory because I suffered, right, suddenly out of no reason, all right, the backside pain. I don't know what type is it, but I went for acupuncture and treatment, and I realized that by just doing one simple thing, hang myself at the pull-up bar. You know, they like to do the pull-ups, the men, right? Just hang myself every day, 5 minutes. It solved the problem and that never recur. Okay, so the need to hang myself at the pull-up bar, I mean, literally holding with the hands to make sure the whole body is straight, becomes a trading plan that I have to do. So I do it every 1, 3, 5, 2, 4, 6, swim. Why I turned to swimming was because I've actually hurt my foot, right, with over exercising. So that was a fail in the plan. All right. So that is the pre-trading plan. So what's your pre-trading plan? Then that means before you trade, is there any pre-trading plan? So some people might just say, before I trade, I need to have a good breakfast. If this makes you very happy and free your mind, do so. Write down a pre-trading plan. All right. Some people say pre-trading plan is to routine is to write my trading journal. But if writing a trading journal is very stressful to you, right? Don't do that. Do anything that helps you to relax and reduce your stress. Anything. Okay, so 1, 3, 5 for me is to hang myself at the, not hang, to literally put my hand and make sure my body becomes straight so I don't suffer from that backside problem anymore. And 246, I will swing. That's why I get a lot of trackers recently. Yeah. Okay. Now next, the never break vow. What's that? Have you listed what is the never break vow? My never break vow is I never borrow money from my family, even if I lost all my money. Okay, that means I never use the money that I've put aside for my children's education and for my parents. Never. Okay, and never to throw things on the floor because I make a losses. Okay, never to destroy my health. That's why all my students know that I sleep early. 11 o'clock, I want to go and sleep. Sometimes I cannot. Now my son, right, sleeps at 12:30. So I sleep at 11, he will wake me up at 12:30. Yeah, so that's my schedule right now. Okay, so the never break vow. Okay, please create that. Even if it's not written down, just keep in your mind. I know that goals are something that we want to achieve. Okay, but the goals in trading can be very simple. Okay, a lot of people will say, I want to have money. All right, is this the reasonable goal? Is reasonable. But some unreasonable goals means that I want to make $1 million with $10,000. Is that reasonable? That's not reasonable. Okay, 10,000 into 1 million in less than half a year, unless you take super high risk. Okay, all right. So I think we need to be reasonable in terms of your goals. All right. So for example, what do I want? I don't want to. There's a period of time that I suffered quite bad psychological issue, such that to the point, right, I start to talk to my monitor. Have you tried talking to your monitor? You really talk, no? Why are you like that, huh? Why are you doing this to me, huh? Why? How come you never give me money, huh? You talk to the monitor, you keep talking to the monitor because you are trading day in and day out. You have no friends, right? And then you don't go out. You just want to make money. And then, you know, when I was young, you don't have all these aching problem here and there, right? And you talk to the monitor because you just need to release your stress. So my mother asked me, why are you talking to the monitor? Right now, maybe logically you talk to a monitor because you have to do webinars, right? But when I was younger, there's no such things called webinars at that point of time. Talk to the monitor because monitor my only friend. Okay, so I think that we have to be reasonable in our goals. Okay, I want to make like $2,000 extra a month, but I want to also be socially able. Okay, and this socially able is very important to me. When I had that very lonely time, I literally lost all my friends, meaning that because of not doing very well, because of the need to also be doing very well. And when you start to do very well, you get very aggressive and you want to keep on trading, right? And your friend asks you to go out, you say, no, I don't want, because if I go out, I miss this particular trade. And by the time you keep rejecting, your friend also doesn't want you to go out. Luckily, okay, I was able to come back and then to get into a lifestyle that I wanted. All right, so I think we have to have what I call a hot marker. That means that when to know when you need to stop. Okay, all right, what is that marker to say I need to stop? For example, you burn your account of $2,000. I want to stop here and I want to look back and to see why. Okay, if you burn your account for one more time of $2,000, then you want to know, all right, and is this a hot marker? Do I need to pause for a while and do we look inside that? Okay, all right, then of course, I'm not saying that you need to learn your own psychology. I think you need to understand a certain things about market psychology. Okay, that means that you have to define certain truths of the market. What are the truths? Things like the market is always right. So these are hard truths that I learned. Don't fight the market, don't fight the trend. React, don't predict. Why is react, don't predict? Don't think that you are smarter and you think that it is definitely going to go up because my indicators tell me that this is going to go up. I think it is going to go up, and then you keep on buying. Don't go and predict. All right, because when an analyst predict, he or she is not responsible to you. All right. But when you predict and you make an action, you are responsible for it because it directly hits into your account. You see in your account. So when I say react, don't predict, it comes in with the design of wash and rinse. What wash and rinse did is that we never say that that particular resistance will result in a wash and rinse, or that particular level will result in a wash and rinse. We always say that that is a resistance, and if there is a wash and rinse pattern, we react to it. All right, so I'd rather be slow than be fast. I'd rather be the one who is following behind the commandos than to be the commandos to hit and then fight. Okay, so these are certain market psychology that I've learned to define myself. Okay, what I've defined, right, might not be relevant to you. So therefore, you need to go and find some things to define as your own market psychology. But what I have put here, right, they are generally true. They came from my own experience. Okay, and define your own psychology. Anybody tried throwing your things when your trade don't turn well? What are the crazy things that you did and probably you think that that should never happen? Would be that psychology you need to define. Okay, things like revenge trading. Have you tried that before? Revenge trading, you think that you are right and you keep on wagging in that term. Okay, or you don't dare to cut the losses, and then you realize that the losses just keep on piling up, and by the time you cut it, it's a lot already, and when you cut that a lot of losses, it will turn the other side, back your own direction. Okay, so these are your own psychology that you have to define. I know that these are things which are very, how to say, not interesting. Okay, but when you are at it, you realize, it's very important. Okay, so one of the things, right, that I will do is I never lose my temper. That means I don't get angry at people easily, even my children. Even when people say very bad things to me, I also cool. All right, because the market had tamed me, right, a lot already. That means that whatever bad things that the market did to me, it's just making me this constant temperature person. That means, right, when I make losses, I don't feel sad. When I make profit, right, a lot of money, right, I also don't feel happy. Okay, never. All right, I only feel very sad if I cause people to lose money. So that is something that I feel very sad. Okay, and one of the things, right, that I never do is I never celebrate my wins. That means that, let's say for example, this week is a lot of money. I never say that let's go and eat and then celebrate, or let's go and buy something and then splurge. No, I don't do that. The most I might do is maybe go for a swim, you know, or maybe just go and eat. I don't like to eat, so it wasn't never, you know, that thing. I never go and splurge. Because why? Because all these are all very hard-earned money. Okay, now you find that people like to maybe buy a car, expensive cars, and show their cars, right, whenever they have in their YouTube or whatever, to say that these are the cars I made, etc. I don't do that, because if I do that, I get punished and I buy the market. I don't know whether it's because it's bad luck, but also I tried that many times and every time I get punished. Okay, so I never splurge or never celebrate. And this is very bad, because then it doesn't bring me joy from trading, right? Okay, but so far, 100%, if I celebrate, 100% the market will punish me. So that is my never break vow, never celebrate. Okay, miserable life. Okay, now so you know all these rules, market psychology, own psychology already, right? You have probably defined them. Maybe right now in your brain you say, okay, I shouldn't do this, I should do that. But one thing I have to be very frank, you can write down your plan. For example, your teachers will ask you to write, this is my New Year resolution. All right, how many actually do and go and make your New Year resolution come true? I want to tidy my house. I want to, fix this bad habit. So all plan, but no action. Okay, I'm not saying that you are all plan or no action, but I'm just telling the truth that a lot of traders, they have a lot of plan and they wrote long list of plans there, but every time the same thing happens. Okay, and therefore we can have a lot of trading strategy, a lot of trade management, a lot of risk management to say things like, I don't want to risk 2% of my trades. Every time when I hit 2 losses or 3 losses, I will take a rest and pause. How many of you have this resolution and have stuck to it? Can I just have a bit of a confession? How many of you like really stick to your trading plan during that trading strategy, that trade management or risk management? How many of you didn't break it? Is it that you all don't raise hand, or really you all broke it? How many of you in the webinar, that you really stick to it? You are really a very rule-based person. Nobody? Okay. Now, I'm not saying that you are wrong, because we are human. Human has emotion, and this is our strength. All right. But is there anything that we can help to overcome this? Okay, so this is what I want to say. Okay, so as a risk management, all right, if you ever want to automate any of your trades, the simplest one to automate is your risk management. Okay, meaning that you could, in a trading platform, already define how much you want to risk in your trade. Now, by controlling your risk, then you are actually controlling your losses. Okay, so this is the easiest part that can be automated. That means that you can let your robot or whichever thing control for you. Okay, meaning that, let's say, for example, you dare not cut loss. Okay, but what if every time that when you enter the trade, all right, it is only X% of your money, all right, and when you cut it off, it's probably you don't feel any pain. Why do I say that? Now, let's say, for example, if you have 100,000 or rather 10,000 in your account, all right, it makes a difference between losing $100 versus $1,000. Okay, because, for example, let's say somebody has a $1,000 in the account and the person will lose $100, versus somebody has 100,000 in the account and the person will lose $100. Still, in both cases, they lost $100. But there's a difference between, all right, the mindset of a $1,000 account versus a $100,000 account, right? Okay, so the first thing that you can do is to control your risk by defining how much you want to risk per trade. So in terms of trade management or risk management, all right, what we can do is that we can say, okay, money is how much I want to lose in a trade per trade. I want to lose $100 in a trade, or I don't mind losing $1,000 in a trade. So by defining before you open a trade how much you want to lose, then it enhances a lot in terms of your psychology. Okay, it strengthens the psychology when you already know how much you can lose. Okay, so you can try things like, I repeat to myself 3 times. I want to lose, in this trade, I will lose 100, 100, 100. Is 100 okay? If it's okay, then you go ahead and do it. Okay, so that's risk management. So you can also say that, for example, how much you want to risk per trade, like your percent such as you want to lose 2% of your account. If your account is a $10,000 account, you lose 2% of your account means that you still have 98% left to fight. So is 2% okay or not? So usually on risk management, we will take two approaches. All right, one is the percentage of loss of your account or the amount that you want to lose. That means that every Y dollar that you have, every like say $10,000 you have, every time the trade will lose $100. Okay, so this would be the first type of automation that you can adopt. All right, now as a combination, you also want to consider the total amount of risk at any one point of time. Why is that so? For example, you can say that maximum I can only put in 5 trades, and if each trade will risk $100, so the 5 trades multiplied by $100 would mean that your account, your total account at that point of time would be at risk of $500. Okay, now you have to, in a way, right, cycle yourself whether you're okay with losing $500. Now, if you're okay with losing $500, then one thing that you can achieve is you can sleep. Okay, all right. So anybody doing this type of a risk management before you open a trade? Oh no, don't have. Okay, now, so I will talk about how to calculate that lot size, meaning that you can calculate the lot size. But first, let's assure your mentality a little bit. Okay. Now, a lot of people ask, for example, even to wash and rinse, they asked, what is the accuracy? Now, this question is wrong. Okay, because when you evaluate, right, a person or a system's profitability, that means that whether the system can make money, right? The question is not to ask its accuracy. Because if you look at the chart here, a system, all right, of only 40% accuracy, if your profit, that means your reward, that means every time when you win versus every time when you lose, all right, your reward to risk is 1.5:1. That means that every time you make 150, and when you lose, right, you lose 100, you can, on a 40% accuracy, achieve a break-even status. Okay, all right. Now, if you have only a 50% accuracy, now this 50% accuracy is very important. That means that when you turn a coin, right, it's random. This means that 50%, half the time it can be head, half the time it can be tail. Now, when you have a 50% accuracy in terms of your system, but your reward to win ratio is going to be more than 1. Okay, that means every time when you win, right, you win more. Every time when you lose less. Then you can achieve profit in this case here. All right. So the correct question to ask whenever you evaluate a method is to ask, then what is the profitability of this trade? By asking that what is the reward to risk ratio that we are looking at, not purely the accuracy. Okay, now what this means, right, is that you can have a random method that only has half time win, half time correct, as long as you can write your winner and cut your losses at the point. Then overall, under a mathematical evaluation over time, you should make money. All right. Then the question is, right, if you look at this probability, then why aren't people making money then? Or rather the other way, then why are the so-called claim gurus making money? There must be a reason, you know, the difference here, right? Okay, so it might be that whatever method they are sharing with you is really truly working. The only difference is that they might be still not able to cut losses fast. They might be able to hold on their gains better. Okay, this is one way to look at it. All right, now the other way is that they are better and more able to spot trades which has this high reward to win ratio. That means that we talk about 50% as random, meaning that we don't know which trade is going to be win or lose, right? But what they can do is that out of this 50%, they are able to spot trades which allows them to win more than to lose less. That means to win more, to lose less, correct. Okay, so this is the key thing I want to bring out here. Okay, now which comes up to again back into the risk management, because when you look into the risk management, right? So one is the key thing here is if you look into any method here, a lot of people is going to focus on the trading strategy itself. That means that a lot of emphasis, right, goes into the method of entry. Okay. Whereas to me, what is most important will be this particular chart here, which is not the method of entry, all right, but being able to write a winner to cut a loser fast. Okay. Now, why do I want to say that? Now, let's do a bit of a psychological test. You are going to take 10 trades here. Okay. Now, in these 10 trades, 6 trades will be winning, 4 trades will be losing. Right, let me just ask you, and you answer truthful to yourself. First trade is a loss. What do you do on the second trade? Do you continue to trade on the second one? Yes or no? First trade is a loss. Okay. Now, second trade is also a loss. What do you do on the third trade? Do you continue to trade on the third one? Meaning that you have 10 trades, you just don't know when the win will come. But you know that this is a 60% to 40%. Okay, so you continue on the third one. Now the third one is also a loss. What do you do on the fourth one? Would you continue? Stop. Yeah, that's human nature, right? You will stop. But don't forget, the fourth trade is a loss, but the fifth trade is a win, and the sixth is a win, 7 is a win, right? But you missed out. Now this is the biggest problem here, because we are human and we don't function like the machine. But when you take a look into the big guys out there, what they do is that they have a machine out there sitting there. Who are they? The machine is a human, right? But they are tasked to just keep on clicking the button. Okay, because if they don't click right, they are not going to draw back the pay. But for us as retailer, if we don't click, it means that we might not make the losses. We might not lose money if we don't click the button. So then we stay away. All right, but by staying away, that trade might become that super winner. And then you're going to hear, wow, some of your friends say, do you catch that super winner? You say, I didn't. Oh yeah, why you never catch that? And then you say, okay, never mind. Next trade, I'm going to do it. I'm going to catch it. But out of the 60-40, right, the fourth one is the winner. The fifth one is the loser. Then only the number 6, right, is the winner again. This happens very often. Okay, so that's human psychology. That's why on theory, this chart here works to tell you that even with a 50% probability in accuracy, right, you can still be profitable on a reward to risk ratio of 2:1. All right, but in reality, we ask ourselves whether that's true or not. Okay, now I'm not trying to make you demoralized. I'm just sticking to the truth of trading. Okay, now in terms of trading strategy, what we do is that, of course, there are rules that we want to follow, such as we will define our trading strategies of entry and exit. And this is what we focus a lot. But apart from the entry and exit, we can have a perfect entry, but we know that there's no system that guarantees 100% win, right? But in terms of the entry, even though we can make sure the entry and exit is a perfect one, but we might not be there to trade. That's the key thing. What do you mean I might not be there to trade? Maybe out of 10 trades, 60 win, 40 is the losing trade. You are willing to take every 10 and all the trades. You are there. But the problem is that sometimes we are just simply not being able to be there to take all the 10 trades. That is the biggest problem here because of our limitations. We have to sleep. We have to function as a human. All right. So we cannot be there watching. Okay. So Now, if you can be putting all this to a machine to help you in terms of automation, including one thing, right? Including choosing the instrument to trade. Now, why do I say instrument to trade is very important? Starting from this year in Jan, what happened to the stock market? Last year, the stock market was still very nice, trending upwards, very easy to trade, right? Now, what happened to the stock market if you start trading in this year or investing this year, January? What happened to the market? Because we are generally predominantly still biased a bull. That means buyers up predominantly, even though we have instruments to help us short. IG has a lot of instruments to help you short the market. But as retail traders or investors, we are still predominantly going up and buying up. So if you are trading into the stock market, you probably won't do well. Okay, but there is one particular instrument that did very well in the whole falling stock market. Do you know what that is? Make a guess. US dollar. If you have just closed your eyes and put in, like for example, a long US dollar trade, that would be really very easy. Okay, but the question is, do you know that you should be focusing into the US dollar? Okay, now this is where it goes back in the first thing, right, that I want to say, right, have fear of missing out. It's not that we are not a good trader. It's just that simply we do not know at that point of time things are happening. Okay, so that's why when I am teaching stocks, one of the constant questions that came out is that, Binni, how do you design a stock screener? Okay, meaning that apart from needing to trade, we also must be aware of what to trade. Okay, so your trading strategy has to incorporate things like your entry and exit, which to me are the easiest parts to handle. How to enter, for example, cross up a moving average can be an entry method, cross down a moving average can be an exit. But the question is that, can you find that easiest instrument to trade for you? Okay, so now next, hard part first before I give you the solution. Hard part first, right? Next is trade management. Let's say, for example, you have already entered a trade and the trade is proper. That means that it's doing very well. All right, now you can do things such as to shift your stop loss, which is also part of the trade management, right? Shifting stop loss. Now this can be done, but the key thing is that when we talk about shifting stop loss, you need to be there physically to shift the stop loss yourself, and that becomes a menial task. Not only that, right? For example, you're watching a movie with your girlfriend and suddenly it moves. Oh yeah, wait, I need to shift my stop loss. Okay, so that's easy. But when I have my daughter trying to breastfeed, wait, you don't drink first, okay? I want to shift my stop loss. That seems easy because you can have the handphone to help you. But what I'm trying to say is that there are a lot of things that a lot of people can't do. All right, for example, there's a lot of jobs that you can't bring your handphone with you. So you can't shift the stop loss. Okay, so you have to rely on all these automations. All right, now next is that things like profit target. Now, we talk about stop loss, meaning that how can you use the stop loss to limit your loss. But have you ever think of this? If you don't have a proper profit target, then how do you put the money inside your pocket? Okay, that means that you need to come up with a ways which are very systematic to go and put the money inside the pocket. So you need to have that profit target. Okay, but a lot of time, right, when we open the trade, by the time we think of how much we want, and then we fear of missing the best price, and then we need to put in our stop loss, we need to put in our profit target, right? By the time we calculate all this stuff, right, you're already very tired already. Okay, and last one, which is the most important thing. Have you ever thought of this? In a dollar trending up situation, how you wish that you bought a lot in the first place, correct? Even let's say you caught already, but then you only have one mini trade. One mini is $10,000 only. Okay, how you wish that you can put in like 1 standard lah, 10 standard lah, 100 standard lah, then you're dreaming already, wow, then that's a lot of money. All right. But you know, the key thing is that when a trade started, has just moved, right, you just don't know whether it is the correct one. Okay, so if you heard of, you know, stories like turtle traders, then what they did is that along the way, when the trade becomes successful, they keep on adding to that position, adding. But what is the common problem of adding the position? Have you tried adding position to a winning trade before? Those in the webinar, have you tried adding the positions in a winning trade before? And what's the problem when you encounter if you have added your winning trade? Average up, right? Yes, but what is the problem that you have encountered? You actually didn't dare to keep on buying an average up, because we humans are more used to averaging down. Correct? We are less used to averaging up. Meaning that, right, when you have a losing position, you are more used to actually keep on stagging to buy low and keep on piling into losses, correct? Because you want to average down a position. However, when it comes to a winning position, you are scared to keep on scaling up, adding position. For one reason, you're scared that if I keep on adding, I keep on increasing my risk, right? If it doesn't move up again, then I'm going to lose the money. So in human psychology, that scaling up, that adding position just doesn't come in naturally. All right, so all these are things I want to share in terms of problems. Okay, now, therefore, are there ways to overcome this problem? The answer is yes. And wait, I need to alternate. Okay, so I just want to share with you this video here, all right, which is an automation that I've designed. Number one, what it does, few things is that do you see this small little one here called auto lots 300 USD? Okay, now I know it's very small, all right, but what it says is that when you put in this trade here, you basically tell this robot to go and calculate a lot size based on your predefined rules, to say that when you make a loss in this particular trade, the maximum loss would be 300 USD. Okay, so that will already define your risk. All right, so as I said before, in automation, the easiest way to do is to define how much risk, and that can be easily done, in fact, with a single line of script. Okay, all right. Okay, now, number two is that I'm just going to run through this one quickly first to show you the video, and I'll pause along the way. Just give me a minute. I think
it's the wrong file.
yeah, wrong file already. Yeah.
You just hover over.
No, I think it's a.
No,
I need to go and get the PowerPoint. This is not the PowerPoint. Yeah. Okay, thank you. You just watch this video for a while. Okay, now this one is the point where they will auto entry, meaning that in automation, what you can do is that you can define rules, right? Where you give the robot to say, hey, look, where you want to enter. Now this entry, right, is based on your own system. That means that if you have a system, let's say on moving averages, you can say that if price is above these moving averages, you make an entry. So the first thing, the second thing, right, that you have to put right inside your automation, apart from your risk, that means how much risk you want to have, right? The second component, right, that you want to put it in as you define how you should enter. Okay, all right. Okay, so that's the second thing you want to automate. the entry rule. Okay, now once you have the entry rule already, take a look at this small little green line here, the horizontal. Okay, now this one here is what you define next in any automation. Is what is your stop loss. Okay, because when you define your stop loss, and this is what we call the EP entry price. Now, then when do the automation, they calculate, they are able to take this, all right, to define your lot size. Okay, all right, so you have to first define the risk that you want. Then after that, you have to go into your method to go and say, where is my entry price? That means you have always to go and tell the robot to say, okay, where's my entry price? And the next time you have to go and tell the robot, how do I define my stop loss? Okay, now, so if you go into the wash and rinse that I've said before, this one is your wash line. So this is the wash line here. Okay, so the entry is when price close above the wash line. So see this bar here. This bar entered and closed above the wash line. So it entered once it closed. Okay, then where is the stop loss? The stop loss is very clear. It's actually at the low of this whole wash and rinse pattern. Okay, so there was a question or a few questions asking me, right, where to put the stop loss for the wash and rinse. Okay, we put it at the low here because this low is where that's maximum pain for others. So if price go back, all right, goes back to below this low here, then basically the wash and rinse trade will be wrong. Okay, so therefore you have to go back to your method. So for example, if your method is using moving average, then you can define your rule as saying that if price closed above a moving average, I will buy. Then where is your stop loss? If you close back down that moving average, for example. Okay, now if you are using, let's say, a different period moving average, let's say a 3 and a 10 moving average. So if 3 closed above 10, that becomes a buy. And then where is the stop loss? Stop loss would be the lower moving average, that is a 10 moving average. Okay, so it's always the reverse. All right, so first you always have to define in your automations how much you want to risk and define how you want to enter the trade. And third, right, is to define your stop loss, because only when you have these three things, right, then they can calculate the lot size. All right, any question here? No, okay, let's just move on. Okay, you can see that the entry was made already. All right, now price continue to go up. Oh, wait, I know how to fix this because we have a. I would just pause and then keep on going. Now, price will continue to go up. Now, what is more important, right, is where I think there is a need to define where to take an interim profit target. Okay, now there are some systems, right, that keep on shifting the stop loss. Okay, when it hit a certain profit target, they would start to shift a stop loss. Okay, now there are things such as a step stop loss, which IG will have that. Now IG would say things like, if price goes up by 10 points from my entry, then we will activate the trailing stop. Okay, and when price goes up another 10 points, the trailing stop will step up by another 5 points. Okay, so these are what we call a trailing stop loss. Now, therefore, when you want to start to activate your stop loss, you have to have a pre-target. What is a pre-target? Pre-target means that you need to say that if I buy a stock at $1, when it goes up to 150, 150 is my pre-target, it should start to trail my stop loss. Okay, you cannot not give them a basis to start the stop loss. So for example, like driving car, if the car speed is at 180 km/h, then a safety rule will kick in. So it's the same way as we design certain rules in our life. Okay, so it's the same thing. You tell your children, if you score this mark, I give you that. So it's the same. Okay, so there must be always an activation point where either you should be taking profit or you want to activate the trailing stop. So trailing stop is a very important component, right, of your automations, because this is something where I said before, right, even though you know where to put in the stop loss, you just didn't have the time to go there and make that trail, especially when we need to sleep, because sometimes the activation point can only happen when it is at night and we need to sleep. Okay, all right, okay, next up. So you can see that the stop loss has been shifted to the lower one. All right, now in these particular automations that I've designed, not only that the stop loss has been shifted, see that this is the new stop loss here, it has been shifted because it keeps on showing the stop loss. Now what this automation does is that it also continues to add new position to a winning basket. Okay, now adding new position to a winning basket is always very tough because we always dare not add position. All right, because we fear that by adding the position, it might just turn the other way around and we don't lose the money. Okay, but one thing about automation is good, right, is because this type of automation will automatically calculate how much profit that I have locked in for this trade. Let's say, for example, I risked $100 for this trade, and by shifting the stop loss, I've already made the trade into break even. That means no loss. All right. Now, as the stop loss keep on shifting, right, I have accumulated $20 as a profit. So the automations can quickly go and calculate your entry price and your new stop loss, and then put this $20 back into the market, so that end of the day, right, when you keep adding position, you don't actually make a loss. Now, human is very difficult to do this. Do you know why? Just by going through what I've said just now, right, your mind will thinking, wow, what is she talking about? How come the new entry price minus the new stop loss, and I take the profit and then divide what's that? Okay, but with automations, they can do it in a split second. They go by millisecond, not nano, but millisecond, ms, right? And they can automatically calculate the lot size and already open that trade for you, even before you take out your calculator. So this is one thing that I love about automations, seriously, because as human, I am not that capable. First, the automation doesn't sleep, which I sleep a lot. Okay, but the second thing is that at least when it calculates in all those new trade size, we are able to do it immediately. Okay, all right, so far any question? Yep. Yeah. No, because it would have probably stopped the trade out, because the original trade here, right, is actually a buy trade. So if it really turned the other side, you would have actually stopped the trade out. So all these lines are preempt lines, lines which are automatically drawn by the automations. So it won't stop it won't open another way if you don't define a hedge. Yeah, you have to, in your system, right, say you allow a hedge to happen. Yeah. If it does and you allow a hedge to happen, then that will open a new trade. But if your rule is to say no hedge is to open until I close my trade, then that becomes part of the system. Then they will have resulted in a sell. Okay, because this EA, right, or rather these automations allows a buy and sell trade direction. Okay, so you can have in your automations, right, to say that I will allow both sides automatically, or I only allow a buy side or sell side. So this you can actually define your automations. That means when you create the automations, you can actually say, ask that automation to do it. That means ask the programmer to input this for you already. Yeah. Okay. All right. Let's continue. Okay. You can see that the new trades are being opened, but I want to talk about, right, is that when you see the new trades being open, right, the stop loss has been shifted. See, this was the old stop loss, SL. So this is the new stop loss, the new SL. Okay, and the new trade has been opened here. Right. Now, when it has been opened, there's many times that we are scared, right, that it will threaten this stop loss. But if you have automations, as long as you don't meddle with it, right, then it doesn't touch means it doesn't touch. You can just switch off your screen and then go off somewhere else. Okay. Many times you find that, hey, actually it works, but because you meddle with it and it doesn't work well. Okay. So anyway, this is just one example to share with you how you can automate. Just let me just clean this away. Okay, so what it did, right, what it does here, it's add on the new position, all right, and the stop loss kept shifting. Okay, the new stop loss have been shifted to this one, the small lines here. You see, stop loss have been shifted again, and then added again, shifted again. So these are things that we never expected it to happen. We never expected that to happen. I mean, many times that when we think that it won't go up, it keep on going up, you see? And after that, right, it hit the stop loss and everything just auto exit here. Yeah. Okay. So what it does is that it forces an auto stop loss automatically without you knowing. Second thing, right, it forces an auto exit. Why? Because I said before, many times you can't get the money because you have fear of missing out, because you thought that, oh, it might go higher, higher, higher. So you don't want to exit the position. So by the time you decided to exit your position, no money already. So automations, if you can control, all right, these automations is what we call a partial auto type of automations. Basically, you control the direction. You say that I want to put it into this particular pair that you want, and then you just trade accordingly. Okay, so that is the type of automation that can be done. Okay, so first automate onto your risk that you want to have, automate onto your trailing stop loss, and automate your exit. All right, if you don't want to automate adding position, is fine, but automate these three things which are very important. Okay, all right. Now let me just continue this one here. All right, so to mention what was outsourced here, the auto entry was outsourced, the auto shift stop loss were outsourced, the winning position and the exit was outsourced as well. Yeah. Thank you. I'm actually using Mac, so when I come to window, I see stars. Okay, now how to improve quality of looking for trades. Number one, this is what I do. Okay, I have a dashboard. That means that instead of me looking for a trade, and this is the very important tools in my life. Okay, I have that trades are being pushed to me. Okay, so what I did for my own trading is I built myself this dashboard here, where in one screen, I'm able to know which are the trades that are interesting. Okay, so for example, take a look at those which leads up. That means that this one here is in yellow color, right? So this means that these are trades that just recently happened. Okay, by knowing these, I know exactly what I need to go and trade. Now, this go back into what I said already, fear of missing out. Because a lot of time when we don't know how to, we can't make money, right? Not because we don't know how to trade. It's just that we don't know that they are trades that's actually happening. Okay. What I think is it's not only about learning the theory. We need to also be informed at the right time, all right, that when a trade is happening. Okay, so this will increase a lot on your profitability, or at least to reduce the losses. Okay, so if you can have certain tools to help you to just at one glance pinpoint that certain entry. So there are a lot of tools out there, such as they have arrows to join to say that all the moving averages are going up or certain things, right? Depending on your methodology. So what I strongly suggest is in this new way of trading, there are so many instruments that you can trade. All right, is to have something that provides you one glance. Okay, so this type of automation is also very easy to build. Okay, as long as you can have the rules, you just build a dashboard. Clearly, it shows you all the trade potentials. Okay, then next is this one here, which you can have if you are using MetaTrader 4, which IG has. All right, you can set in a push notification from your computer, all right, and push it to your handphone, so that we are able to know exactly, right, when there is a signal. Okay, just let me just illustrate this point to all of you. All right, so for example, on the 5th of October here, right, I have a signal that says it's bullish and it closed above the wash line. Okay, so where is the wash line? Somewhere around here. All right, so rather than to go to the trade, at least if you can have certain of automations, right, it can tell you that there's a trade going on and you can actually go and look at it. Now take a look at the time here. It's 21 hour. That means you convert that into a 24-hour format. It will be at what time? 9 o'clock. Okay, I told you, right, my trading happens at 1, 5, and 9. Okay, so why am I able to be notified? Because every time my handphone would at 9, even my children know about it. At 5, it would, right? Because then I get pushed on all the trades. I never get to miss a trade. Now, one of the things that I also get very, very concerned about is I want a warning. So I talk about time frame of trade. I said that a good time frame to trade is a H4, 4 hour, or a 1 hour. But you know the sequence. A 1 hour will always happen before a 4 hour, because you need 4 1 hour to make up 1 4 hour. Okay, so what I built for myself is a warning. That means at 7 o'clock, 1900, I would have already received that there is a bullish signal, all right, on this pair that I want to trade. And then this happens at 7 o'clock. So 7 o'clock, I would sort of like get ready, because I know that already. And then when it happens at 9 o'clock, then at least, you know, I can say, okay, I want to go back home already. Let's end it. And I just put in the trade. Or 7 o'clock, I can get ready and I can just put in my automation so that at 9 o'clock, you automatically enter a trade. Okay, so that's the type of automations that you can do as well. That means that to provide an alert to your trade. Now, this helps a lot, right, in fear of missing out. Because when you miss out a trade, then you want to hurry to open a trade. But if you don't miss a trade and you know it in advance, right, this can be a trade that you want to do, then you don't have that fear of missing out because you are aware of exactly what can happen already. Okay. All right. Now, next, I also, for myself, I also like to color code my trades. Now, likewise, when I ask you for your wash line, green is equal to what, magenta is equal to what, right? I want to make sure my chart is very clean. Okay, so when I look at others people's chart where they have so many things inside, I get very, very confused. Sometimes I don't even know what they are looking at. Okay, so for my own chart, in terms of automations, I don't draw any lines. A lot of all this manual work, all right, so like these drawing of wash lines, etc., have all been outsourced. Okay, that means that I try to make sure whatever that I see would be very precise. That means 1 + 1 is always equal to 2. And if there should be a wash line there will always be a wash line for me. That means a machine will never lie, okay, because they are being coded to go and find a wash line. Okay, so this can be a very easy way of automations that you can do. Let's say, for example, if you want to use a pivot is what you want to use, right? You can go and find any indicators that put inside your chart to draw in the pivot automatically for you. Okay, so if you are using moving average cross, for example, and you just don't know when it crossed, so there are a lot of automations or indicators that pinpoint that cross and exactly. So try to make your drawing precise. Okay, let me just. Okay, I'll answer the questions in webinar later. Okay, let me just finish this one first. All right, now I just want to share a typical trading day for me, and you probably understand why I have quite a lot of time. Like for example, before I came today, right, I was doing I have a exercise ball, aerobic exercise big ball, right? I was doing what's it called? Trying to reduce my tummy crunched. Okay, at the ball before I came. All right. So this is a day for me. Okay, most of my trades start at 1 p.m. Right now, my daughter, she comes back by herself. So I actually am free at 1 p.m. Last time I need to fetch her. All right. My son also comes back home himself already. So I'm free at 1 p.m. So 1 p.m. I will usually look at my trade. 5 p.m. would be the time where it's very active for me, because that's where the US markets, right, starts to get up, but more important, the European markets open. Okay, and 9 p.m. Would be usually I conduct my webinars for my students. Okay, but before I start the webinar, all right, I would have already checked the trade, so share with them what I want to talk about. All right, and if I need to put in the trade, and then when I end the webinar at 10, I can just put in the trade at 10. Okay, now so 1, 5, 9 would be very important for me. Okay, and I trade across different instruments like gold, FX, indices, commodities. Okay, so these are the instruments I trade at 1, 5, 9. In the morning, of course, I do the stocks. At night, I will do some of the options. Okay, so this is a typical day. All right, and one of the trade that I was planning was actually euro. Okay, so that happens during the March. All right, I won't share with you what was being planned, because you can use your own method to go and plan for a trade. But if you look at the planning of trades that I'm doing here, what I did was a multiple time frame planning. Multiple time frame means that I will start off this one to tell me that this is a week chart, for example, I think so. And then this was a day chart. Okay, you realize I'm doing the multiple time frame analysis, and this one, which is a colored one, is a 4-hour chart, because 4-hour is where I triggered in the trade. Okay, that means the trigger. Trigger means that the exact point to click the button, which is 4-hour, either 1, 5, 9, whichever the signal happens. Okay, now so these are the 3 planning. That means that week, day, and H4. Okay, no, now so at 4:45, 4:48 p.m. I think that for those in webinar you can see, but in seminar you might see it very small here. 4:48, right, was when I posted a planning. Okay, what was I looking at? I was actually looking at a 5 p.m. close. Okay, so in the morning, I actually had already dragged in this robot that I've designed. All right, at 9 p.m. because I was hoping that the trade might come in at 1 p.m. but it didn't. Okay, then at 5 p.m. The trade opens automatically, because at 5 p.m. when the rules are met, right, it will just open the trade for me. Boom, right. What I have to do is just to define how much I want to risk for this particular trade. That means I want to lose like $500. I want to lose like $100. Just put it in. Okay, and then at 9 p.m. what happened is that the trade managed to take a partial profit, and then it have been shifted to break even. Okay, and I go to sleep. Okay, now the shift to break even, right, can result in two things. One is that you will protect your position. Okay, but the other thing, right, is that when you shift to break even too early, when in the morning, when there is a huge spread, when the spread opens up, right, it can trigger your stop loss. Okay, so this one, I want to say is that there are benefits of doing it and there are disbenefits of doing it. So you have to know entirely on your system. Okay, so in other systems that are designed, I have actually opened options like you want to shift to break even, or you want to reduce your loss. When you hit a certain marker, you reduce your loss, or you can lock in more profit depending on what is your risk profile. Okay, so there is no right or wrong answer. It really depends on your risk profile. All right. Okay. Let me just clean this. Then next day, at the next day, because this was 31st of March, so next day, 1st of April at 9 a.m. So what this automation does is that 9 a.m. it will automatically attempt to shift the stop loss. Okay, meaning that they don't care as long as you're in profit already. All right, they don't care at 9 a.m. When 9 a.m. starts, hit, right, it will shift the stop loss according to the rules. That means that you don't need to be there to go and shift the stop loss. I remember I was in the bank, all right, I think trying to withdraw money or something like that. So I received an alert, your stop loss has been shifted. Okay, now this is something that I love a lot. Why is that so? Because remember, right, I said before, we have a lot of demands. Okay, it doesn't mean that when you are there, you know how to trade, you can meet these demands. You might be somewhere else, you need to run errands. Especially, I mean, to be very frank, there was a period of time I was actually in and out of the hospital. In just less than 3 months, my father was hospitalized 5 times. Okay, and I probably spent half of that 3 months, right, in hospital also. So because of this, I can't really function and work on my trades. Right, so these are genuine needs that we need to do. So 5 p.m., 9 p.m., 1 a.m., nothing happens. And if you take a look at the trade, right, the entry point was here. Okay, by the day 2, right, the stop loss has been shifted to here. And then by day 3, because it kept going down, right, and then the stop loss has been shifted lower. And at each of this blue color point, it actually added position. So this was one of the nicer trade in dollar because dollar was actually going up. Okay, all right. If you take a look at this, there is this ultimate profit target that was being defined here. But even if I don't have that profit target being met, it would be trail out. Trail out means that when it hit a certain stop loss, I will be out of the position already. Okay, so basically nothing happens between 5, 9, and 1 a.m. because there's no trailing, there's no adding, so nothing happens. I'm just going to jump quickly into it. And then at 4th April, which is over the weekend already, it starts to shift the stop loss and then add in new position, I go to sleep. And then 5th April, you shift the stop loss again, add in position, I go to sleep, and then nothing. Exit already. Okay, why do I want to say this, right? This will probably answer why sometimes certain people can be out here to talk. For example, I still have a lot of positions running behind, but I'm not scared. But when I ever doing some sessions, right, I look at students, they keep staring at the handphone, and some keep staring at the computer. And worst thing, right, one student actually dropped the handphone inside the toilet bowl. You know why? Because they brought the handphone inside to look at positions. Have you? Do you? You do, right? I'm doing it every day. I bring the handphone inside the toilet to go and look at the position. Okay, I mean, sometimes to watch YouTube also. It becomes a habit. Okay. But what I'm trying to say is that freedom here. Okay, all right. So this is a partial automations that I've designed for myself. And it helps me to relieve. And it doesn't mean that you need to design these on your own. I'm just giving you an example. So what are the automations? Number one, all the lines that are drawn manually are all drawn by automations. Okay, so that's number one. Number two, all the things that can help me look at prices clearly are being color coded and being coded by automations. Okay, so that's number two. Number three, whatever that I need to monitor are monitored by the automations. That means the dashboard. At one glance, I know exactly what to trade. Okay, I don't look at the trade. I don't go and look for the trade. The trade come and look for me. Fourth, your handphone is probably the only thing that you carry except your IC. Because sometimes I don't carry IC. Now we carry digital IC, right? Your handphone is probably the only thing that you carry with you all the time. And therefore, the alerts will be sent to the handphone. Okay, the fourth, automations. And the fifth one, I recognize myself. I am not good in cutting loss. Come on, we are human. All right, I'm not good in cutting loss. I suck at calculating the lot size. Okay, because we can never beat machines in calculating lot size. Millisecond, they plug in already. I'm just going to press the calculator. All right, and seriously, when I look at how much profit I have, right, sometimes I just didn't want to exit because I just hope that there will be more. Okay, but when all these things happen, my market can just turn overnight. You know, we saw what happened last Friday. Last Friday, the US market from down for no reason shot up. Okay, then how do we control all this when we are all sleeping? The answer would be automations. Okay, now I'm not asking you to go and get automations that you just put it there and then it will lay golden eggs for you. So this will not happen. All right, if it happen, I will probably create that myself. All right, seriously. Okay, because I've created tons of automations for myself, plus also work for a lot of professional traders. All right, end of the day, they still need to employ a position keeper. And they have multiple strategies running, hedging, etc. One turn on this, the other turn off this, etc., etc. So it's a lot more elaborated. For us, we cannot afford this kind of automations. The only thing is that what I do is that I decide whether I want to put this partial automated robot inside to trade. So for example, if I am positive about this particular instrument A, I just put it into A and I define that, okay, it should only buy or you should only sell. And the rest it will handle. I just have to make one decision whether I want to put it in. The rest, it will open, it will put in the stop loss, it will throw the stop loss, it will exit the position, it will add the position, everything all handled already. Okay, it's the same thing as when you are vacuuming the floor. You have to just press the button to let that vacuum cleaner start the auto mode. Okay, so I strongly encourage anyone out there, whether you are in the webinar or whether you are, in here, all right, to consider some form of automations. All right, so first automation that IG can offer is that step trailing stop loss. Have you explored that before? No? Yes? Yes? Okay. All right, so you can actually try that. And the second easiest automations is to have this position size and to calculate that position size for you. All right, and that, I think IG will also have that. Okay, now let me just take a few questions from the webinar. And also, if you have questions, you let me know. One of the question, right, is that you draw a wash line at day 1 and entry at H4, right? Yes, you should enter into the H4. That means that every day is 24 hours. You can break your 4-hour candle into 6 candles. So let's say, for example, at 1 p.m., it has an entry below or above the wash line, you can enter already. So that is the strategy. Yeah, I will still want to review and to let for myself to decide whether I want to let it trigger, because I'm smarter than the machine. The machine is really to handle all these menial tasks for me. So if you look at what I've designed here in one of this automation, is to handle all those tasks that I can't overcome, and I think a lot of people cannot overcome. Okay, I mean, there is really no way for me to be awake, right, 24 hours. I can hire like traders, but to monitor the positions. All right, but I think that they can monitor whether that automation is working. But still, if you can let the trading be conducted by the automation, it will be a lot more precise. Okay, all right. Any questions before I pass the mic to Ethan? Yeah. Identify what? Okay, so let's say, for example, right, this one here, I'll just give you this example, right? So this is a wash, because this is a 4-hour chart. Therefore, there was a close, right? So this was a wash line here. Okay, you see this? So the selling, right? That means the entry would be at this bar here, the end of this bar. But this is the H4 bar that closed below the wash line. Okay, so that is like an entry. Okay, what is being done is that there's also a need, right, to check for whether these are good levels, you know, as I mentioned in all the lessons. But you should do that. You should check all the levels, etc. Like it shouldn't be just using this as an entry without checking all the qualifiers. Yeah. Okay. Any other question from the webinar? Okay, I think there are a lot more. Can wash and rinse be applied to a different time frame? Well, the rule is always stay. As I said, right, wash and rinse can be applied to any time frame. But if you really want to catch this type of a big move, right, the huge move here, you should be looking at a wash and rinse in a day time frame and to execute that in the 4-hour and a 1-hour chart. Okay, I mean, if you don't mind a 20-pip moves, then you can just do it at the lower time frame. But if you want, like this one was, I think, 330 moves, 330 pips moves. Okay, so if you want this type of movement, then you have to stick to the time frame that I recommend. I mean, when the machine tells you can enter the trade, you still want to review whether it's good enough to enter. Yes, I still want to review whether it's good enough to enter, and I have actually made it a requirement for all my students using my automations. Okay. Where to find wash and rinse online? Google my name, no? Okay. Any other questions from here? Yeah. Yeah. Yes, there is. You can define that. For this automation, it does. For this automation, it will stop. This is what because based on my experience, I code it for my own use, right? It will stop entry on X time on a Friday. You can define that yourself. And then you can automatically exit everything, winning positions at the end of the Friday. Yeah. But you probably cannot enter on a Monday because the rules doesn't meet. But because this automation here, right, you have to understand what I'm trying to achieve. I'm trying to make trading, right, very precise. What is not precise? The amount of risk that you use every time. Okay. One is very manual. The need to calculate the lot size is very manual. All right. The need to put in the stop loss and target profit. So the automation has this trade panel there where you can just press the buy and sell panel, buy and sell button, right? And you will automatically put in the stop loss and the entry and the target profit and calculate lot size based on what has been defined. But you can still manually trade that. So it's a very flexible thing, meaning that it can be automated, but you can also at any one point of time decide that you want to trade it right now, and then just press the button and let the robot manage the manual trade. You automatically open yourself. Yeah. because I've traded for 20 years already. I've probably tried and designed my own automations and tried a lot of automations out there, and come to a conclusion that nothing beats my own brain. All right, but there's a lot of weaknesses in human. Okay, I mean, the one fact was what I've experienced when I had my children. All right, is you know, sometimes they land in the hospital, which is something that you cannot foresee, right? But you have your trades going around, okay, but they are in hospital because of some bronchitis or whatever, pneumonia, you know, and you really don't have the mood, right, to go and manage your trade. But you know that if you don't manage it, the huge position there, right, will be at a loss or whatever. So, but when this kind of critical thing happen, you know that automation is there to help you manage. At least it set yourselves in a very peaceful mode. At least I'm not in that hurry to go and look at my position. Okay, so I developed all this after encountering the whole cycle, the trading cycle. All right, so I'm pretty much realistic in the approach of trading. Yeah. So it took me, like, for example, when I started, I was like 17 years old. So it's probably took me like a whole 20+ years, right, to go and realize it. But I started my automations quite early stage. So for example, if you have just started, then by knowing from me, all right, that you can do these kind of things, it can fasten your speed, right, a lot more. I think that's what training is all about. I mean, from my perspective. All right. Okay, let me just answer some of the questions. Yeah, Alan. Yeah. Mm. Is it automatically? Yes, for me, right, what I will do is that I would my own typical exit, right, is actually based on range, the ATR. Yeah, but in the automations, I have actually put in that you are able to exit based on X% of your risk. That means that 2 times of your risk or 1.5 times of the risk, right? So you realize that it's very much depending on people. Okay, so my style, right, is I'm able to write a trade. So I can write a trade pretty long, and that is really how I make the money. All right, so I don't mind getting stop out many times, and I just want to hit one wonderful trade. Okay, that's really from my experience of how I make the money. But some people might not have this experience. So some people might want to exit and keep on entering, exit and keep on entering. Okay, so I've set a pretty far stop loss and keep adding the positions, but that also means that, right, I have other trades that keep getting stop out and break even, getting stop out and break even. Yeah. So I asked myself one fine day, which is a bigger evil to me, whether I'm afraid of getting stop out or afraid of losing a huge amount of money. That means huge potential for money. Which one is worse to me? So after years of understanding myself, I realized I don't mind getting stop out, but I mind being stupid not to write that huge move. Okay, but some people might answer that differently from me. Some people might say that, hey, look, it's okay to not make that much of the money. All right, I just don't want to get stop out because I can't sleep when I get stop out. So you can change that automation differently according to your style. Yeah. So when we design automations, right, we actually leave this flexibility. Okay, that means you can exit based on reward to risk ratio. You can exit based on a certain criteria, like when you reach a certain levels or when certain things happen. Yeah. Any other questions? Yeah. Yes. All the cryptocurrency is actually one of the, I would say, the forerunner, or rather the catch up, right, which is a very strong catch up in automations. So you're asking this set of automations, it does work on cryptocurrency because we designed that to be working on all instruments, including commodities or indexes. But I'm talking about generally automations, all right? The cryptocurrency works even better because a lot of people, when they are trading cryptos, right, they are using a lot of automations. Yeah. Okay. Any other questions? Yeah. Yes, you can design your own MT4 automations. In terms of IG, they have all these position sizing and they have all these trailing stop loss. So the first thing, right, I would really encourage the first thing that you go, right, and look into your IG platform again is to set that position sizing so that you know exactly how much you want to risk. And second, right, to use that trailing stop loss that it has. Okay, the step and the trail is one thing that they have. Yeah.
In your previous seminar, you mentioned auto box. Is it from TradingView?
Yes. In TradingView, there is this function which is called multi-time what indicator already? Multi-time period indicator.
Is a review to IG going to introduce TradingView?
No. This is purely like what I've used just to share with you how to identify support resistance easier. You realize that my style, right, is very practical because while you learn about support resistance, where you draw on the high and low, right? But when you go back home, usually you have a problem trying to understand which one to draw. So I want to make sure that whatever I'm talking is not theory because these are the problems that I encountered myself. So I designed the solution for myself, including automations. I mean, the inability to look at my positions at one point of time was the key reason for me to automate almost like 95% of my trades. Yeah.
Are you familiar with Pro Real Time, which is available through IG?
I have tried to understand that, but I think at any one point of time, right, one person can only be familiar with certain coding. So Pro Real Time is working on another form of coding, whereas the MetaTrader is another coding. So Python is something that I'm actually working on for another trading. Python language.
Oh, Python.
Yes. So at this moment, I'm only good. I don't know how to code myself, okay, but I understand the algo and the logarithm, the flow, the structure. All right. So I specialize on the algorithm. I mean the flow and the structure, right? Than the programming language. But sometimes I still need to look inside the languages myself. So therefore, I specialize in certain parts. Okay, so Pro Real Time, if you ask me to look at it, the logic should be there, but I'm not good at it. Okay, yep.
In the name of auto trading, how would we react when the market gap up or gap down if you choose to hold the position over the weekend, especially for stock investors?
I don't understand this question because because when you have automations, right, when it gap up, right, that's in your favor. I don't know how you want to design it, probably start trailing. But when it gap up, that's against you, right? You probably be stop out. Yeah. So I don't think that is an issue with automation here. Okay, I think it's at 9+ already. I passed the session to Ethan. If there's any other questions, then you can just ask me here. I don't want to hold the people in the webinar up for long. Okay, Ethan, thanks a lot.